What is going on, ladies and gentlemen? I'm not a financial advisor. This is not a financial. This is not financial advice. If you want to watch my live streams every single day, I feel like a broken tape record right now. If you want to watch my live streams every single day, you know what to do. Click the link in the description. I literally live stream and live trade every single day and teach in live time, and I'm pretty accurate on the bias too. So, great community. And then if you want to buy a few Apex accounts, again, 71% off sale, I'd definitely recommend buying a few. I'm testing a few strategies out on a few right now. So click that link. They're pretty easy to set up, and it's not like a scam or anything. So I've gotten paid out from them before. So that's it for now. So this video, I'm going to be going over my take on chain and stated delivery. Okay. And I noticed two different ways you can do it. Okay, there's a little slightly different, but kind of little two ways. So what a chain to state delivery is, it's basically when we get an order block and then we close above the order block and then we go higher, lower. So for example, okay, if we have let's say we have a green candle right here, a green up close candle here. Okay, let me just make this green. And we go over it, okay, like this, and then we close back under it. That's your chain of state delivery, okay? So we have to close back under. If it's like this and we go like a wick, is it a chain of state delivery? Nope, it is not. All right. So it's not a chain of state delivery. If we wick under it, we have to close under it. Now, the two things that I've seen people use this with is with sweeping liquidity and not sweeping liquidity, but there's kind of two different takes on this. So what I mean is, when we actually get the chain of state delivery where the candle closes legit closing below, okay, is it really a chain of state delivery if we don't take out some sort of liquidity? Like, let's say this happens. Let's say liquidity is up here. Not really, okay? I prefer the chain of state delivery more if we've taken some sort of liquidity, okay? Now, does that mean the candle which has a chain of state delivery, does that mean this candle has to hit buy side? No. Okay, we don't have to hit buy side off the chain to say delivery candle. We can, like, we could have taken out buy side before, like do something like this, and then we could have gotten the chain to say delivery here. So just when you're looking for a chain to say delivery, make sure that the best ones are always going to take out buy side first. Okay, so this is really the key here. And just remember, it's not a chain to say delivery if we wick below and don't. We have to close below. Okay, body means everything. So this is the best case scenario. If something like this happens, I don't trust it as much. Okay, we need to take some sort of liquidity out. All right. So in today's example, okay, I basically said, if we look at my index commentary, I basically said earlier, okay, I said if we close above this down close candle, which was this red candle here, if we close above it, which you can see the closes in 2 minutes 30 seconds, I want higher, and I had this internal range liquidity marked, and I had these data highs marked. Okay, so this down close candle, the fact that we closed above it told me everything. However, did we ever take liquidity when this candle was present? Okay, when we closed above this candle, did we take liquidity? Well, many people would say no. Well, that's not true. We did take liquidity, and we're delivering out of 4 hour fair value gap. We took liquidity. We purged liquidity off open. We swept the PM session almost low. Okay, I think it was a PM session low. Yeah, so we swept the PM session low here. The pivot low. There was an SMT with YM here as well. Okay, I'm not going to show you guys, but basically YM made a higher high here. NQ made a lower low. So there's an SMT. We swept the low as well. Okay, so that's kind of two influences right there. All right, and the third thing is this was the Judah swing off open. So if you know anything about Judah swings, like, we'll get a Judah swing of the opposite move off open, and then we'll go the opposite way all day. And then the fourth thing is what? We data highs above, and I love these data highs as liquidity pools. They're just really good for liquidity pools because there's typically voids above them. So knowing all that, now if I saw the change in state delivery, would this be valid? Well, yes, it would, because we took liquidity down here. We don't have to take a liquidity again up here. It's fine that we got our Judas swing. We purged liquidity here. We don't have to take it again. So that's why I said, okay, this would be a valid change in state delivery. And even though you might think, oh, we're definitely bullish here, even though you might already think that, this confirms it. Like this candle close confirms what? We should go to the next intermediate term high. And again, I always say this in every video, but these highs inside these fair value gaps are very good targets, okay, for liquidity pools. So again, that kind of confirms it. And even if you look in the 1 minute, it's technically a market structure shift. So it's a market structure shift, or in this case, actually a break of structure, because we don't really reverse here. It was already in an uptrend. And in the 5 minute, it's a chain to state delivery. Okay. So do you see what I'm basically saying now, right? So you don't have to, like, this chain to state delivery candle doesn't have to sweep liquidity. We don't have to sweep liquidity on this candle. All that has to happen is we have to at least sweep liquidity at some point. And we swept it earlier. We kind of had that early morning reversal before the 4-hour closed, because it closes at 10, and that's usually when we get a reversal if the conditions are right, and they were today because we had equal highs above. So this is just a kind of a trend chain to state delivery, which should confirm the highs should come. Okay, and that's why I kind of wrote this little statement here saying if we close above, I want higher. Okay, but it's not confirmed until that candle closes. Okay, so that's the first way I use it. The second way is this way. Okay, we have our up close candles, and it's the last up close candles that take the high. So this was the last one. Okay, so we get a green candle, green candle, green candle, sandwiched between this red candle and this red candle. And this right here took out, I mean, we were already above the highs at that point, so I would count this. We were at buy side. This was buy side, basically. Okay. We get a 3 up close candles, and then see how these do, like, this method is exactly like if we were to do this right here. Okay. Same picture, except this chain to state delivery is actually on the liquidity we swept versus this one was not. So this is valid too. I think the most high probability one is probably this one, okay? But if you're really confident in bias, this can confirm bias for you. So I think this is the highest one for sure. It's just looking for those up close or down close candles, and then a close back below that last up close or down close candle. So just like in here, we need to see close. If it's a wick, it doesn't count. Okay, so in here, we end up closing. See how we close down here below this candle? So we now know this is the chain to state delivery. And what should that tell us? Well, that should tell us we should go to the next low. Well, there's definitely a bunch of suspicious lows down here. Definitely that doesn't look like retail resist or retail support. So this chain to state delivery basically tells us the market's going to go at least target this. Okay, and because we are so high, where's another target you could look for? Well, you could see, do we have any unopened fair value gaps on the higher time frame? Like, is there any unopened fair value gaps lower? And indeed there was. And I also called this out as well. I said, basically, I want to see the market retrace into this 4-hour fair value gap, and then I want to see the reaction. Okay, and if you go back to the 1 minute or the 5 minute here, okay, and you look at that chain to state delivery again, that chain to state delivery takes us all the way back to the 4-hour fair value gap. And at this point, I'm not really bearish. I just want to see what happens. I want to see if we kind of reject it, get a long setup out of it, or if we get a short setup out of it. And to me, price stopped like almost midway here, almost a CE, I think. Wick held CE, or body held CE. But you can see, like, this is an example where we use chain to state delivery when we hit a high, and then this is an example where we already hit the low earlier, but this is kind of telling us the trends can continue, and we will not hit this fair value gap right here. Okay, so that's a little bit about my take on chain to state delivery. I know there's a lot of videos on YouTube regarding this, so I know this might not be the best one, but that's kind of the way I look at it. Maybe I explained it in a way that you felt was obvious or easy. And yeah, that's all I got for now. Let me know if you guys have any questions, and enjoy the rest of your day, evening, night, wherever you live. And yeah, peace.